you guys don't know what I'm going to be doing, I'm going to be breaking down the next $6 index pairs from the daily moving into the smaller time frames. Going to be trying something a bit different here, guys, when I'm going into the highlights section, and I'm not going to be going through the longer time frames and breaking down the entire market environment. That's what the full length webinar is for. And so in this, we're going to be breaking them down and seeing how we could potentially look to execute these trades for the next 24 to 72 hours leading into NFP. And so with that, I hope you guys enjoy this video, and let me know if you guys like this better than rather me going through the complete breakdown on the highlight section rather than just leaving it for the webinar, for the full length webinar. And so with that, let's get started. Looking at Euro from the daily time frame, guys, and then moving into the smaller time frame, what we were stating was there are three areas that we are going to expect Euro to pull back from. And let's begin. The first one is going to be the previous high of where that potential right shoulder is, left shoulder formed, which the right one could, or the previous low of where this entire initial impulse had come about. And we can label this last low of where we are within structure as our current base right now. And so looking at it, why are we stating that we are expecting structure still to continue down? If we take a look, we did start with a very strong impulse to the downside, stating that any bullish trades to the upside will be treated as short-term or a state of liquidation. And so if we continue to rally to the upside, this is still going to be treated as short-term or a state of relief, because this could create the right shoulder of this head and shoulders pattern, and we are still expecting this to kick in, and so this could drop back to here. Or we're expecting one more pullback to the 121, 122 handle, creating a structural retest of the initial breakout that had occurred, and then from there expecting a very big drop down. The only way that we can definitely say that this is invalid is if and only if we made a strong crack above these highs and most likely above the weekly resistance, continuation, and start running that back to the upside. But taking a look at the 4-hour time frame to see how we could execute a potential entry within the next 24 to 72 hours. Two ways. One thing you do want to factor in is that market momentum is in fact descending, and on top of that, the blue highlighted box does tell us that structure is range bound. And so looking at it, we can see that we do have a strong impulse, treating all of this as potential relief or state of correction for potential continuations back down to the range of the consolidation. Now, the two ways that these sells or the buy is going to play out is either A, we're going to break above the descending trend, and more importantly, the weekly resistance. Then from there, we're going to look for a short-term pullback or continuation, and then we could expect a rally back to the daily resistance. Please keep in mind that this will be treated as short-term simply for the fact that we are range-bound. Now, the only way a sell will come about is if and only if we break back below not only the daily support, but this ascending trend. We can see we have a low and then a higher low, but more importantly, this is the main low. And then from there, we're going to look for continuation pattern, and you could run that back down to the daily support. Both are short-term simply for the fact that you are in range-bound. Failure to do either, my friends, will warrant consolidation, and that should not be something that you guys are interested in. Moving on to USD CAD for the next pair. To start, we are already in this trade, and so if you guys are not in this trade, be careful moving forward, okay? And so looking at USD CAD on the daily time frame, we can see here to start that structure is still, in our opinion, a state of relief or correction after that initial impulse that occurred. And you guys can see here from what I'm highlighting, this is too decelerated, too exhausted to state that we are in a bullish stance. Now, looking at it, okay, even though we broke out of that weekly descending trend and broke out of this very strong monthly resistance, one thing to factor in is that we are creating a structural retest of what started this entire drop, which if you look left was the break of that 131, 132 handle. So we would not be surprised if this just starts to crack here and then potentially cracks all the way down. If you guys are confused why we're expecting such a bigger drop, take a look at the full length webinar to see why we were expecting CAD to continue to drop. Now, taking a look at the smaller time frame, we already went over how we looked for the entry, and so there's just going to simply be two possible ways. I'm going to state that this is range bound, and so let's make it very simple. Either A, this is going to pull back and falsely break above, invalidating this initial breakout. From there, we're going to look for some type of continuation, and then from there, you guys could look to run that back to the weekly resistance. Now, if that doesn't happen, the safest way is going to be a break below the range, pull back, and then from there, look to run it back down. Now, please factor in we're already in this trade, but once again, if you do take the sell, it's going to be much more short-term and potentially higher risk, only because if you look at the roller coaster analogy, we are at the way bottom At the same time, the entire market is ascending, and this could all simply be treated as relief for continuations back to the upside. That's very possible as well. The only way that we can definitely say that this is invalid is if and only if we do break back below, stating that this initial impulse was not valid. Failure to do either, my friends, will just warrant consolidation, and that should not be something that you guys are interested in. Pulling it to the next one, USD JPY, to start on the daily time frame. We're in a very critical area, my friends. We did state, and you guys know from my training course, if you've taken it, when two channels intersect at the same point, one descending and one ascending, we are not looking to take the trade. Rather, let structure prove to us which way it wants to go. Why fight with the market? Let the market prove to us. In addition, let's take a look at something here. We can see a very strong impulse. And then from there, we can see that this is all treated as liquidation or relief for potential continuations back down to the ascending trend that can be found on the weekly. Now, one thing you do want to factor in, though, is that we did break above this range of consolidation that was for about 3 months, in which the initial impulse is bullish. Now, we are in a state of range or consolidation, and so it's really going to be a two-way bias. Either A, we're going to break above, small pullback could tag the weekly, but the big buy is above the weekly and more likely the daily, and a pullback, and you could attack the 113.60 handle only because you want to invalidate this. The only way the sell does come apparent is if and only if you get a short-term sell below this ascending trend, and you could look to target the lows and potentially even lower to the weekly support. The bigger term sell comes below the weekly support down to the weekly ascending trend. But looking at it from a 4-hour time frame, two ways that we can approach the structure. Okay, we're going to be taking away all these green arrows here for a second. Apologies. And so looking at it from a 4-hour time frame perspective, two ways that we see it. As of right now, this is range bound, and more importantly, we are above the monthly resistance. And so we're going to look for it in two ways. Either this breaks, pulls back, and then we could run it down to the daily ascending trend. This still could be treated as relief or correction for potential continuations back up. Now, if that doesn't happen, the medium-term sell is still going to be below the daily support. You could run that down to the lows. But once again, like we said, the real sell is going to be below that weekly support. Now, the only way it does become a buy, and where you guys can see my green line, is you do have a short-term buy above the 111.20 handle, a small term continuation, and then from there you could look to run it to the weekly and potentially even to the daily. Regardless, once again, you do want to factor in is that we do have false breaks here. You can see in the past that there were a lot of pending orders, and so we are going to expect a lot of pending orders in the future, making all of the buys, my friend, very high risk, and so be careful on that end. Moving to the next chart, which is going to be GBP USD, starting off with the daily time frame. Two things to factor in: a chart that looks just like euro, and so we are expecting two potential areas that pound could come back to. Either we're going to pull back to the left shoulder, where a potential right shoulder, the head and shoulders formation could come about. Why are we saying we're going to pull back? Let's look into this. We have a very strong impulse, and then from there we have a nice state of a decelerated descending channel, but more importantly, that's not a continuation pattern, but rather a reversal. On top of that, if you do look in the past, there were a tremendous amount of pending orders sitting there, and so we are expecting the same support and resistance, vice versa. You guys have good understandings of where the market makers could potentially be placing orders, as well as where the bank's orders could be sitting. Now, taking a closer look, why do we highlight these three key areas? Now, take a look at how the sell started. It broke the low. Now, on top of that, if you look at the formations that come about, we could expect the potential head and shoulders to come about, creating that right shoulder. This would all be relief for potential continuations down, and this 131 being the neckline for the completion of the head and shoulders. Now, if that doesn't happen, it could pull back even more to the 138, creating a structural retest of the initial low that it broke, and then from there expecting the drop. Remember, we are still bearish long-term because of the initial impulse. The only way that this becomes invalid is if and only if we break back above, stating that that is no longer a valid break. Taking a look, though, at the 4-hour time frame to see how we could look to take trades, please factor in that the entire market is descending, and so there's going to be two ways that we're going to go about it. Market is descending, but please factor in is that you are in somewhat of this range, and on top of that, what we saw on the daily, pound is very decelerated, very exhausted, and there was a lot of pending orders sitting within this region. So taking a look at it, if pound does in fact start to break out, you could expect a small rally back to the weekly descending trend line. Now, once again, we're going to take this to the tops because A, you are descending, and B, more importantly, you want to see a daily break above the 133, small term continuation, and start running that back to the 130, 440 handle. Now, once again, this will still all be treated as relief. Hence, all the buys are going to be short term, moderate to higher risk for potential continuations back down to the lows. Once again, all the buys are going to be short term because you are dealing with a great amount of bearish momentum. Now, if those don't come about and they don't come to fruition, the only way that we're going to be looking for the sell in something like this, and sorry guys, it's more of a level break, not a trend break, but is if and only if this is the impulse, treating all of this as relief or a state of continuation for continuation to the downside. Now, that is very possible as well. Now, the sell would most likely be initiated below the daily support to invalidate this initial buy. And then from there, you have a short-term sell down to the bottom of the ranges. Failure to do either, my friends, will just warrant consolidation, and that should not be something that you guys are interested in. Moving to the last two pairs, AUD USD to start on the daily time frame. We can see here, guys, in the past that there were a lot of pending orders. So, and it does make sense why we are starting to see some bullish orders coming about on AUD. Now, please factor in one thing here, okay? When we dropped here, this is not continuation, but reversal. Now, when we were going through the webinar, we did state that AUD, right, did break out of the weekly descending trend, but didn't necessarily break through the lows. But on top of that, we are stating that the entire momentum in AU is still to the downside. And so taking a look at it, this formation was in a 3-month reversal pattern, but it didn't matter because we finally got the liquidation that we wanted, and then we saw continuation. Once again, this could form a very more deeper, complex reversal pattern, just keep going, and then start to pull back. That's possible, only because of where we are within structure. But as of right now, we're going to make it very simplistic, and we're simply going to wait for the breaks of the highs or the lows for us to have a clear direction on which way it's going to go about. So just like I said in the webinar, I am keeping, and you know how I like my charts clean, I'm keeping the breaks, I'm keeping the false breaks within here, only for me to see that we do have a false broken area. So you can see the false breaks at the tops and the lows. And so let's take a look at how we could see potential buys or sells. If we break above the range of consolidation, a small continuation pattern, you guys have all right to long that to the daily resistance and potentially start running it all the way back here. The reason why I'm saying here is because this could start to drop from here, why this would be treated as relief. And even if we still continue to move up, this could still start to drop because of the entire momentum is still bearish. And those would be your sells. Now the buys are going to come, those would be your short-term buys and the long-term sells. The only way the sells are going to come about is if and only if A, this ascending trend breaks, and B, more importantly, we break back below the consolidation, small pullback, and then you can drop it down. Why am I saying below the consolidation? You need to invalidate this initial bullish trade to state that you should see continuation down. Please factor in after this impulse. That is not reversal, but that is continuation. So in my belief, we're going to expect a bigger rally back to the upside, but we will see. And last but not least, New Zealand, a pair that everyone believes was breaking out, but you can see here we did have a lot of bullish orders sitting here in the past, and so it makes sense why New Zealand is starting to pull off or starting to reject. Now please factor in again that you are range bound, and so you guys do, this is not the best range bound drawing, but you guys do want to factor in that New Zealand is range bound from around 66 up to around 76, about 1,000 pips, okay? And so looking at it, right, we made this really strong impulse, a nice relief for a state of liquidation, and then we saw continuation. The reason why I want to highlight this channel for you guys is so that you guys can see that this is not a continuation pattern. Now it is creating our impulse, or it is creating our trend. But now what we are expecting then is that if this is going to be the high, this is going to be a low, we need a lower high or a pullback. State of liquidation could create a structural retest on that low and start dropping back down. That's possible. Now, the only way the sell is going to continue otherwise is if it's going to start just really impulsing down. That is possible as well. But looking at the 4-hour time frame to see how we potentially could be looking for entries for the next 24 to 72 hours is as such. So if we do take a look at New Zealand, we can see here that the formation of this bearish channel is an impulse, small deceleration, another impulse, small deceleration, and then we will drop and then pull back. Now, this is all one movement, so we're going to state that was liquidation or relief. We got another impulse, another state of liquidation or relief. Now, two ways are going to come about. Either this is going to break back below, invalidating that initial impulse, small pullback, and then from there, you could start running that back down to the daily support. The only way it becomes a buy is first, let it clear the previous 4-hour resistance, creating short-term higher highs. Let it create a continuation pattern, a small pullback, and then from there you could look to rally back up. Once again, this will be treated as relief or a state of liquidation for potential continuation back down. And even if it keeps legging up, guys, this is still all treated as relief. It's just a deeper correction until we invalidate this initial momentum, which is by breaking back above. Failure to do either, guys, will warrant consolidation with where we are in, and that is not something that you guys should be interested in. And so with that, these are the pairs that I want to go through, guys, in reference to the dollar pairs, to be looking at how we could potentially be taking trades in the next 24 to 72 hours. And so I hope you guys enjoyed that little segment. It's a bit different than how I normally do it, simply for the fact that I would go through from the way top, from the monthly down to the smaller time frames. And so let me know if you guys kind of like this. If not, I'll go back to the old style and make sure that I'm bringing in the longer time frames as well, to give you guys a general idea of how structure could be playing out and why we're expecting these types of movements. And so with that, thank you so much, guys, for sticking around and watching, and I really appreciate that. And now we're going to be getting to the questions and answers.